Alright, let's get into it here. Alright, good afternoon everyone. Today is June 8th. It's Friday, June 8th, 2012. It's also rollover day. The contracts actually rolled. The new contract became available yesterday. The old contract is going to be available until a week from now. It'll actually expire next week. Volume, I believe, this morning on the new contract surpassed the volume on the old contract. That is the June contract. Alright, it's now out to September. That is for the NQ, the ES, the YM, the Russell. It will be for the 6E on Monday, I believe. I traded the M today because at the beginning of the day the M was leading in volume. The better trades today, they came on the U contract, and I'll go over both of them here on the ES. The morning was it wasn't much. There wasn't much to do this morning, really. We had one trade on the ES. We had two trades on the YM, and 3 trades on the NQ. We're down 1 trade on the ES. We're down 1 trade on the YM. One of the trades was a break even. And on the NQ, we're just about break even, just a little better than break even after the few trades that we had. I believe we had 1 losing trade and 2 small winning trades, and that put us just a little better than break even. There's not really a lot to go over. I will do it anyway, but I'm not going to drag it out. Alright, there were a couple of trades here in the morning. Right at the open there was one, tested the BBC with some bearish divergence. He hit the BBC there, gave it down close, and price moved down. This trade over here was the one that I took. We had a cross up right there, and price pulled back down, tested the BBC, and gave an up close. I got long, and I lost. This trade right here, it came right after it. We had bearish divergence. Price tested the BBC, gave a down close. I got short there, and I got most of the loss back right there in the single trade, all but 2 ticks. I had 4 contracts on, so there was a little slippage in there, so it was 2.5 ticks, it seemed like. There was a little bit of opportunity in here, but it was really choppy as the morning was coming on here, or dragging on. No trade in here because there were too many bars down below the BBC, and the cycle turned red. In here there was really no pullbacks, no real opportunity to get long in there. Right here was the spot to get short. I missed it, but it was right in here. It was an opportunity to get short. Another one over here, though the cycle was blue a little bit there, so you might not have wanted to do that right there. Now, what I'm looking at here, guys, I should probably go over that. You look for the bearish cross, the divergence down here. When I say divergence, I mean the green line is moving away from the cycle. The cycle is the thick line down here, the cycle portion of the slingshot. Price moves away from and back up to the BBC and tests the BBC. This is the part where it moved away. This is where it came back up and tested it. With the bearish divergence, it gives a down close. You look to get short on the down close. So right there would have worked out just fine. I missed that. It looks like I took a trade over here somewhere because I have a yellow arrow in there. That by itself, I think I got a couple ticks profit on that trade, and that was it. I didn't take any more trades, I don't think. Right here was an opportunity on the long side. I don't think I took that. I don't know, this must have been my last trade. Okay, that last arrow must have been something else. This was my last trade. I shorted right over here, and I took a little bit of profit on that. So all in all, I'm up just a little bit on the NQ. Alright. On the ES, I took 1 single trade right here. We had the bearish cross and pull back up to the BBC. I shorted the BBC, and I stopped out for 2 points right there. That was my only trade on the ES. Let's see, let's go over here to the NQ. Why didn't I take the long after the failed short on the ES, Keith? Because it didn't pull away. Right here, you have to have price pull away from the BBC and come back down to it after you get the cross. Alright, it didn't do that. It did over here, but if you look at the time on this, this was just a few minutes ago where it came down and hit the BBC. right here is where the morning session was ending. I had an order on to buy right here. Dwayne and I both did. Had orders on to buy if it pulled back far enough, but it didn't. Okay. I'm going to go over the, you know what, I'll just go over it right now, the ESU. If I had been trading the U this morning, I still would have gotten that initial stop out, but there was, as the volume started to pick up here on the U, this would have been my initial stop out right here after the bearish cross. I would have sold right here, stopped out right here, but price did pull away on the U right here, okay? So I could have gotten long right here and taken some profit. Probably over here would have been where I took profit. And I could have gotten long again over here, and I may have taken profit, break even, or may still be in the trade for that matter, if I had done that. But those were the trade setups here. Right? There was one there, and one right there on the U this morning. Okay. That was the, when I say the U, I mean the ES September contract, the ESU contract. All right, this is the NQ. Let's see, I took a few trades here this morning. I'm sorry, this is the YM. I took a couple trades here, 2 trades. I missed this one right here at the open. Tested the BBC with a down close, some bearish divergence. Again over here, I didn't like it because the cycle was starting to move up on us. I took a long trade right here. You see, we had the bullish divergence. We had a bullish cross, came back down, tested, went long right there. The MA1 held it right in, and it reversed on me. I lost right there. That was my losing trade on the YM this morning. Right here, we had bearish divergence with a down close. I did get short here. I ended up getting a break even on this trade. I ended up getting out of it a break even right over here. Okay. Things reversed in here. We got a bullish cross, and we ended up getting some bullish divergence, so there was more opportunity right here, and again right there on the YM, again over here. Now right in here, we were waiting for the president to start speaking, and so we weren't all that interested in taking any trades, and I know I didn't take that trade right there, but we had bullish divergence with an up close right there, but the president was speaking, so we stayed out of the market. Same thing over here, bearish divergence with a down close. Bullish divergence with an up close there and there. And that was pretty much the morning, guys. We had, right over here, we had a little bit of bullish divergence with an up close, but it was right inside a weekly trading zone. Over here we had bearish divergence with a down close after we had the bearish cross pull back up and tested the BBC with a down close. The rules, does anybody have any questions about the rules on this? I mean, it's pretty straightforward and simple. I'm doing the same thing over and over and over and over and over again. All the time, day after day. Market after market, time frame after time frame. We're doing all the same stuff. If anybody's got any questions about it, you can email them to me at support@cfrn.net. If you haven't taken a free trial, you can take a trial at cfrn.net/apply. If you're on the free trial, you should have an email or a voicemail or both, probably multiple emails from me with the current CFRN partner offer, because if you're on the free trial, you're probably pretty close to the end of your free trial, and it's got all the information you need to become a partner. That's it. That's all I have. Do we have Mr. Las Vegas out here today? Yes, we do. Indeed, we do. All right, I'm going to shut the recording off.